So what you guys are saying is that a lot of noise around regulation, it's not necessarily about the quantity, it's more about the quality, but most importantly, it's the space and the collaboration between regulators and players in this industry. Great, so with that in mind, we have a lot of companies who are trying to break into new spaces, launch in new countries, or offer new technologies for their customers, whether it's Web3, whether it's NFTs, the tokenization of things. A lot of lessons learned there from companies that have failed. But in your view, and I want to start with you, Sophie, how do you think companies can best balance innovation, growth, and regulation?
Yeah, I think maybe to address your earlier point as well, when it comes to regulations, I don't see it as particularly a silver bullet in that sense, but really about how do we start with the end in mind when it comes to the financial sector of fintech or financial services. And I really love what Dr. Ravi Menon, who is the Managing Director of the Monetary Authority of Singapore, and I want to quote him of what he said at the Singapore Fintech Festival keynote. I quote, "Everything that we do in finance, technology and fintech must have a larger purpose to expand economic opportunity, enhance social inclusion, reduce risk, and protect the planet." And I really look from that perspective to your point, how do we balance innovation, growth, and regulation? It's really starting with the end in mind. Who are we trying to benefit here? The consumers, the national economic prosperity in that sense. At the same time, to your point that we will definitely see new innovation every single day birthing forth. It will change the way that we operate, it will disrupt our businesses. And so agility is the key, and regulations should not impede that innovation, but have that balancing act to protect consumers. And so I do want to quote what MAS does as well. So MAS has a fintech sandbox for regulatory innovation, where they have a framework for experimenting of innovative financial products and services within a well-defined timeline, within a well-defined space and duration with regulatory support. And so that's an example, I would say, of how the regulatory in Singapore is looking at balancing innovation as well as regulation. Second to your question on scaling new markets, on emerging technologies, I'll come from a Google perspective of how we are very, very privileged, of course, always to be in the forefront of technology. And Web3 is a new buzzword. You talk about NFTs, tokenization, and that is really where we see the next generation of Web 2.0. And for Google Cloud, we are in a vantage point or a very unique position of how we are able to look at transitioning or enable our clients to look at transitioning from the Web 2 to the Web 3 world. And really, it's the future of how do we enable the Web 3 ecosystems or even tokenized economies. And I'll give a couple of examples for that. So for example, BNB Chain is one of our partners that we work with, and we work together to look at the incubating or the growth of early Web3 as well as blockchain startups. And what does it mean by that partnership is that projects that are built on BNB Chain can access Google Cloud's infrastructure, look at, have the ability to analyze on-chain data as well as encrypt information on Google Cloud. And so another perspective from an off-chain point is that Google still continues in the Web 2 world to support and enable fintech and our enterprise customers or financial services with technologies, for example, like the open banking APIs, where that is so critical and important for our customers to reach their customers with new distribution channels, for example, looking at enhancing customer experiences with artificial intelligence. How do you look at data monetization, for example, as well as how do we enable our customers to look at the right regulatory or streamlining the right regulatory reporting requirements. So from that perspective on innovation, growth and regulation, as well as scaling, those are my few points.
I love those points. Anton, you've had experience yourself, a lot of fast growth with Stripe. Tell us some of the lessons, and same question for you as Sophie.
Sure. So I think zooming in on market expansion and scaling in today's world for any sort of technology company, I think cost and complexity have been greatly reduced by companies who build sort of that infrastructure layer of technology. Stripe, for instance, handles all things related to payments and money movement, whereas Google Cloud enables infra. So each time a company expands or scales, they don't need to rethink about servers or storage. So if you really normalize technology providers, at their core, they're are abstracting away the complexity of sort of a domain space. And I think very importantly, they also sort of handle like regulation. In a sort of a personal example, 6 years ago when I came to Singapore and I wanted to send money back to South Africa, I had to walk into a cross-border money transfer services offices to do KYC. So I took my physical papers and sort of gave it to them, and they sort of signed me up. At the time, I couldn't do it online or via their app. Whereas today, sort of enabled by regulation and a more digital-friendly environment, KYC infrastructure providers enable us to sort of seamlessly onboard to financial services. So if you think about from an infrastructure perspective, those KYC providers are doing the heavy lifting of abstracting away complexity. And I think leveraging a multitude of infrastructure enables businesses to really focus on what they're sort of best at. It really enables them to focus on building the best products and delighting consumers, and sort of players like Stripe and Google Cloud can really handle some of that other heavy lifting.